Dear students, now we are going to see Unit 10, the financial environment. So, financial environment means what is the financial background of the surrounding? How money comes and goes, all those things. So, in this unit, we are going to see the financial environment meaning, the components of financial environment, financial market, investors, financial system. These are the major areas we are going to see in this unit. In the previous unit, we have seen the per capita income. So, the per capita means a single person earning, but throughout the society or the entire persons, the earning and the monetary benefits and the flow of supply, banking, all those things are coming under the financial environment. Now, the meaning. So, financial environment is a part of an economy with the major players being firms, investors, market. So, what are the various firms? What are the investors? Who are the investors? How money we are going to get? Whether we are going to get it in the local investors or are we eligible to get it from any foreign investors, or what is the market prevailing for our product? Are we the monopoly over the market, or we have a perfect competition, or so many competitors, or whatever it may be? But the buyer or the businessman must have thorough knowledge on all these things. So here the market represents the financial environment that makes this possible. Okay, so on the whole, what is this environment? Financial environment. The financial environment says, suppose more number of investors are there, more firms are coming into the market, and more that is the consumers are there, then the business having the very good viability of continuing. So capital sources include money from outside parties such as investors. As I told you, the investors, the rich area, the rich persons, suppose the foreign, they earned more money and they want to spend it, they want to invest those money. So they are looking into the place where they can go for investing. So the excess capital normally it will be invested. When we need a good investment. Here there are more and more people. They like to work, they are ready to work, but they don't have investment, they don't have capital. So the government of India thought that when the capital or that the investment, the seed investment provide, if we provide, then the youngsters, the budding entrepreneurs will definitely are able to come nicely in their business. Financial environment has a number of factors. It includes financial institutions, government, individuals, and firms around the business. Firms use their financial market to keep their savings as property. Firms use their financial market to keep their savings. Normally, what they will do, suppose if I am continuously earning the money, I am having 25 lakhs in my account. So, what I will do, I'll try to purchase something. I'll try to purchase some small house or land, or I'll like to invest that amount. I don't want to keep as it is in my bank, in my bureau. I like to invest. At least I will put it in the fixed deposit. but I don't want to keep ideally that money. It is extremely important for the monetary market. Yes. In case I am investing those 25 lakhs in the fixed deposit for one year. Take an example, 1 year, 12 months, 365 days. Okay. Bank know very well that this amount not going to be asked within the year. What the bank will do? The bank will take the money, the bank will keep the money, and the bank will invest, or the bank will give loan to some investors. So to some business persons. So those persons will utilize this money and they will grow their business. In this thing, there are two major advantages. One is, for me, I invested in 25, I invested in fixed deposit. So I am getting my interest. For the other person, he invested the money in his own business and he is getting profit. For the bank, the difference of interest, they are going to packet it. Now, the components of financial environment. What are the various components, parts? Financial managers, investors, financial markets. These are the major components. Our Indian financial system, so financial institution, financial assets, financial services, financial market, money. So these are the major areas. So financial institutions are the banks, development banks, housing. There are so many banks now came into the existence to provide loan for that particular areas. Then financial assets. Financial assets are shares, bank, shares, debentures, all those. Services. So what are financial services? So this loan process, underwriting process, all those things. So financial market, this primary market, secondary market, we say stock exchanges. Money, as everybody. So they are the major areas. The financial managers. Financial managers are responsible for deciding how to invest a company's fund to expand its business. Only the financial managers, because they are continuously doing the work in that finance and they know very well comparing to others. So where to invest the money, the extra money surrounding them. Then the financial managers are expected to make financial decisions that will maximize the firm's value. So they will invest the money to get the maximum return, to get the maximum return of their amounts investment. They are usually compensated in a manner that encourages them to achieve this objective. Normally, it is said. So each and everything in the business they take any action that must be to achieve, that must be to fulfill the objective, the aim. Now, financial market. So what is this financial market? So financial markets facilitate the flow of funds from supplier of fund to firms or governments who need funds. So financial institutions serves as intermediaries by channeling the savings of individuals to firms that need funds. So there is one person, as I told you, the bank was the intermediary because I heard the money, I invested. The other person need loan, he took loan. So the one intermediary was the same way. The fund provider is one person and the end user is another person. And in the middle, they are in need of intermediary who need, they must identify and they have to give the money. So these things are not possible by the government to go and sit and who are all in need, all these things. So they introduce a separate missionaries for all these things. Financial markets represent forum that facilitate the flow of funds among investors, firms, and government units and agencies. So the government and that investment agencies, so they are started to give fund to the needed persons. Now, next slide. The debt market enables firms to obtain debt financing from institutional and individual investors or to transfer ownership or debt securities between investors. What is debt market? Debt market means debt means loan. Getting loan, debentures, issue of debentures. So the issue of debentures, that is debt market. I need money. So suppose if I am the entrepreneur, I'm going to start the money, or I'm already doing the business and I am in need of some extra amount to start a new project. For that, it is quite impossible for me to issue the shares. So what I'm doing, I'm issuing the debt instruments, debentures, and I'm taking the money. So that is also financial market. So financial market in term, the issue of shares, debt, getting loans, all these things financially, I take money and the fund to be inflowed to enhance the business. So the financial markets, this may give a good idea about the financial market, stock market, bond market, stock market. So you don't have that separate. It's not all linked together only. Bond market means where the bonds are moving. Okay, commodity market, money market, derivatives market, futures, insurance market, foreign exchange market. All these are together, put together called the financial market. So in money market, derivatives market will not be introduced, or not like that. All the market, all the things were being executed on investors. So the type of investors. Investors are individuals or financial institutions that provide funds to firm. So they have money. That money, what they are doing, they are giving loan to the firms, government agencies, individuals, whoever need. One person have, and he is giving to other person who are in need. Okay. So the financial institutions that provide funds are the financial institutions that provide funds are referred to and institutions focus on providing loans, whereas others commonly. So the types of investors, see, banks, financial institutions are there ways, personal investors, peer-to-peer lenders, friends, seed investor, initial amount, angel investors, venture capitalists. Venture capitalist means this venture money, venture in equity capital. And then incubator. Incubator means all are loans only. Okay. So purchase order financing, pre-sales finance. And then pre-sales means previously, suppose a particular product that is 1 crore rupees. And 1 crore, the product must go for sales, and the person seller, the purchaser has to give money. Up to that, the seller has to survive. So pre-sales financing, startup, entrepreneur fellowships, all these things are different of investing. Financial system, the process and procedures used by an organization's management to exercise financial verification and timely reporting of transactions that affect revenues, expenditures, assets, and liabilities. The process and procedures. What is the system? System means always process and procedures. The procedure, how to execute. That is the meaning for system. Suppose the person will say, oh, in that place, very good system. Yeah. What is the system means? The correct rules, regulations. Okay. So, in the finance also, they have a good system of giving before lending the money. In finance, the financial system is a system that allows the transfer of money between savers and borrowers. So there is a system transfer of money between one person to another person. Okay. So the financial system can operate on a global level. So this is in the global level, throughout the world level, or in the particular area level, anything. But system means finance providing system only. Next. So that the definitions are given. Franklin Allen has given a definition. Financial systems are crucial to the allocation of resources in a modern economy. Allocation of resources. One person have more and that he wants to give it all. That is allocation of money. Okay. Next. Some countries depend on the country's viewpoint on freedom of trade. Yes, freedom of trade. The Soviet Union had socialist financial system because they value centralized organized state-funded trading. That is okay. In our country also we have this inside the uh, in India itself when the persons are trading, there will not be much rules and regulations. Only when the goods are traveling out of border only we have more and more system. So that the system of trade is not that much so difficult inside the city here also. Okay. Then financial services. Financial services are the economic service provided by the finance industry. The economic services provided. So what are the economical services? See the diagram. Payment, statistics, online transaction, insurance, money exchange, banking, data collection, savings. So financial services. So all these involves money. Services related to finance or financial services. So like keep it in your mind in this way. The services related to finance, whatever may be the services, whether it is online transaction, okay, yeah, I am keeping in my phone and I am doing GPay, right, to other person, fine. In this, one server is there and one person is there and he is executing, though it is all programmed also, there are some persons. Okay. So online transactions, insurance. Insurance means what? One person's risk is shared among many. So the insurance facilities, money exchange from one person to another person, the money exchange, banking, banking services we have seen in the RBI function, commercial banks functions. We are going to see also. Then data protection. The banks, they keep the data so confidential. And it is one of the major duty to keep up the data so confidential. Then savings. So all the savings, back payments and the statistics, whatever that they maintain. So what is the total value of loans they gave during the particular year? What is the total deposit? How much every day it is processing? All these things. Okay, next. Commercial banking services. What is the meaning for commercial banking services? All these banking services. Okay. So commercial means for profit. So commercial always. It is so commercial, yeah. Profit. purely commercial profit. So commercial bank, profit motive bank only. But they are undertaking some of the duties with very, very less amount, and some for free of service also for the sake of their customers they are doing. The commercial bank is what is commonly referred as to simply bank. Okay, bank. Commercial bank means bank. So we don't say that all bank, Indian Overseas Bank, Indian Commercial Bank, we don't say that. Indian Bank, Indian Overseas Bank. Yes. Keeping money safe. The primary operations. What are the primary operations? Commercial banks are accepting the deposits for the purpose of lending. It is the main function of the commercial bank. They accept the deposits from the various people. Different deposit systems were there. Savings bank, current account, recurring deposit, fixed deposits. With that, they provide different types of loans. The cash credit, overdraft, money at call and short notice, mortgage loans, long-term loans. So like that, we have many types of loans. So in issuance of credit cards, they are issuing the credit cards, debit cards for the purpose of withdrawing the money, all these things. So commercial banking services. So banking services, they provide ATM, electronic fund transfer, debit, debit card, credit card, and then overdraft agreements for the sake for current account holders, on the internet banking system to facilitate the customers to view and operate their respective account. So internet banking service, net banking service. So from the net banking service, a person he knows that what is it? What is the deposits? What is the withdrawals? Or how much amount given to others? How much amount received from others? All these things. So it is a system of very easy system to the customers, and they need not go to the bank for to view all these things. They can sit at home, or you can just they can see in their mobile itself. Commercial banking services. So the commercial banking services are provide charge card advances. The bank own money for customers wishing to settle credit advances monthly. Okay, check guaranteed by the bank itself. Notary service for financial and other document. Notary service also they are doing. Accepting the deposits from customers and provide credit facilities to them. So these are some of the services what the bank they do. And what are the services here? The diagram represents you. So current accounts, foreign exchange services, insurance facilities. Previously, what we have seen, the same thing only mentioned here, representing as diagram. So mortgage facility, pension schemes. So what is this pension scheme? Suppose after 60 years, very difficult for earning and running the business. So what they'll do, what the person has to do before 60 years itself, whatever the amount he is able to do, that he will save in his account. Then after 60 years, he'll be getting every month as pension amount. So this is pension scheme. So online banking facilities, investment services, financial services, overdraft facilities, savings account, all this. So these are the commercial banking services. Okay, I think we have explained everything. So investment banking services, investment banking services, that is capital market services, underwriting debt and equity. Underwriting means what? I think I have explained the same thing in some other video also. Underwriting means so in case a company is issuing the shares, 10,000 shares they are issuing. For one share, 100 rupees. It's a new issue, primary issue. In that stage, all the customers, that is the people, the subscribers, how they will know this X Limited will perform well and the X Limited will give money, how all will get believe. Only 50% of the persons, those who know this X Limited very well alone can subscribe the shares. But what that company law says, 90% must be subscribed. 90% of the shares must have been sold. So, otherwise, in case not sold, what will happen? The company cannot be started. That's all. So, that's what it is mandatory nowadays. When they issue the shares itself, that time itself, they should sign an agreement as underwriting with the banks, or anyone can be underwriter. Banks also underwrite. So, underwriter means, underwriting process means, it is purchase of unsold shares, purchasing unsold shares in the market. So whatever may be the shares not sold in the market, that this underwriter will purchase. For this sake, the underwriter is provided with the commission. For the equity share, separate 2.5 percentage, so up to certain level. And after 5 lakhs, before 5 lakhs, there is a norm for that. 2.5 percentage, 1.5 percentage, 1%, like that, the percentages or maximum percentage is given, the corporate law. Sorry, minimum percentage, that is not minimum, it is a maximum percentage. Underwriter commission 2.5 percentage. It should not be more than to that. It can be less than to that, no problem. So the corporate law given the maximum percentage of commission provided to the underwriter. Private banking means it is separate. The person separately they are making private bank. So investment banking, brokerage services, purchase, buy and sell. They buy and then they sell. In this, they take the brokerage. That is the investment banking service, brokerage services. So as I told you now, the underwriting, what the bank they are doing, they purchase the unsold shares. Okay, 1,000 shares they purchased. So what the bank is going to do with keeping this 1,000 shares? Again, this 1,000 shares will be sold out in the market only. The bank to his clients, very good clients, they'll canvas such clients. This company is very good company. We are only funding them. Definitely they will make it right. So you will be getting good dividend. So take this. So they are purchased and again they are selling to the client. With this, they take commission, brokerage, these things. Then this foreign exchange services. What is this foreign exchange services? So the foreign exchange services are in their for one, what is the rate? Okay, for $1, what is how much currency we should give? Okay, what is the currency for like this? It is that exchange. Currency exchange, where clients can purchase and sell foreign currency in banknotes. They can purchase. Suppose if we are going to abroad, that time we can go and say that we are visitors pass, we are going. We want to go see there and come. So how much amount you will give? So I am asking 1 lakh rupees. In 1 lakh I am giving. So that currency they will give. Okay. So wire transfer, where clients can send funds to international banks abroad. From here we can deposit there. Remittance, where clients that are migrant workers send money back to their home country. Remittance. Okay, our friends, so many people, they are working in abroad. So what they do, they send money to the home country. And then investment services. Asset management. So what are the various services a commercial bank executing? Commercial bank executing for the sake of its customers. Asset management. Suppose that The term usually given to describe companies which run collectively investment funds. Also refers to services provided by others, generally registered with Securities and Exchange Commission as registered investment advisors. So investment banking financial services focus on creating capital through client investment. So this asset management is a combination of so much of assets will be there. So the bank has the right or the provision in case the particular person unable to do all those things, and he will be the advisor and he will give some advices how to manage all those things. Hedge fund investment. The prime brokerage employ hedge funds often employ the services of prime brokerage divisions at major investment banks to execute their trades. Prime brokerage, first brokerage, division at major investment banks to execute that. One big, suppose 10 crores investment divided, and each bank, hedge fund, little only for that brokerage. Then custody services. Custody services, then custodian services only. So this the safekeeping and processing of the world securities trades and servicing to associate portfolios. So banks are working as a custodian. So our whatever maybe our profiles, everything, the bank, he's suppose if I am running a company, I am having bank account in one bank, okay, that bank X Limited Bank, X Bank. So that X Bank has all my profile. So right from the beginning, 10 years back, what is how I started, where how much I started, how many deposits I have, what is the fixed deposit, what are the various assets I have, what is the liability, everything this. So they provide this as custodian services. They safeguard our service. Then non-banking financial institutions. So non-banking financial institutions are, they don't undertake banking functions, but they are being involved in this one. They are not directly doing any banking services, but that means they're not taking any deposits, not lending any loans, not like that. But they undertake the services in this financial field. So in the RBI, we have seen that like this type of non-banking, they are the data management, the statistics management, advisory providers, such things. Non-performing assets as non-performing assets. So they are calculating certain so they will calculate what are the non-performing assets and what are the measures they are going to take for the non-performing assets, how to collect money from them. Okay, so what is the reasons for the very low performance, the particular area, why loan not collected, all these informations. Okay. So our RBI tighter regulatory framework for non-banking NFFSI, creating a four-tier structure with a progressive increase in the intensity of regulation. So they regulate the banks with one four. So in order to manage the banking system to be well, what are the types? Mutual funds, hedge funds, venture capital. So mutual funds are the mediators. They are the mediators. They don't do it. They are the mediators. So money collected from the people are invested in one company. Mutual fund, Unit Trust of India. And the fund, each thing is different. All are not going to be invested in one company, not in one project. It differs. Then hedge funds, we told you, for rich investors, funds are raised through the sale of their unit to high net worth individuals and institutional investors. So venture capital firms, companies, they provide finance and technical assistance to firms. Equity, 10. Types. Non-banking financial institution types. Merchant bank, that is the investment bank. Finance companies, loan companies. Financial institutions raise funds from the public for lending purpose. Yes. So they are private finance people. So microfinance institution MFI, they raise funds from the public for lending to weaker sections. Next, the types given in the chart. So it will be easy for you to learn what are the various types. Non-banking financial institutions, all India financial institutions, then non-banking financial companies, then primary dealers. So all India financial institutions are NABARD, National Bank for Agricultural and Rural Development, SIDBI, NHB, Exim Export Import Bank. So non-banking financial company E. So it is mentioned the clear diagrammatic. Just you can understand this thing. In the examination, you will be asked to write that what are the various services provided by the commercial banks, what are the non-banking services provided by the commercial banks. Non-banking financial institutions, types of venture fund, Islamic banks. So these banks provide loans on the basis of Islamic law. So that is Islamic loans. Leasing companies. So leasing companies are, they purchase equipment on machinery and provide the same to companies on a lease. They purchase equipment, leasing companies. They provide, they take the purchase equipment and machinery, provide same to the companies on lease. They purchase. So many companies are there. So an example, JCP and all, they'll purchase one day rental 1,000, one day rental 5,000, like that they will give the lease. Then insurance services. So the insurance services are one person risk is shared among many. That is the thing. So life insurance, and then like that, so many insurance companies are there. There are also finance companies. Okay. So insurance underwriters, and then insurance services, finance and insurance. A service is still offered primarily at asset dealership. The finance and insurance manager encompasses the financing and insuring of the asset which is sold by the dealer. The dealer he sells the product. Okay. On this finance and they'll purchase and they'll sell. Reinsurance. Reinsurance is again there is one insurance. Again, this insurance company is insuring the same product with another. That is coming under reinsurance. Insurance again reinsurance. Then other financial services, bank cards, the credit cards, credit card mission services and network. In all the areas nowadays, we are able to see the ATM machines, intermediation or advisory services. So the advisory services. So personal loan, vehicle loan, home loan, business loan, gold loan, deposits concern, savings, fixed, then internet, mobile banking, customer care, credit, debit, all these are. So private equity, venture capital, already we have seen all these things. Financial market utilities. Utility means how much we are utilizing. That is the certain. That is how much the we derive. Okay, the facility we derive, the value we derive. That is called as utility. So these financial services, since nowadays the banks are providing the financial services, it will be easy for the persons those who are working, that is who's starting or who is already having the business, to continue the business without any problem. So finance is the financial risk in the commerce. That is the first hindrance is financial risk. So this financial hindrance is removed by the banking. So nowadays, the banking sector, they are doing their work very nicely in order to provide good finance facility. So debt resolution is a customer service that assists individuals that have too much debt to pay off as requested, but do not want to file bankruptcy. So that is they give loan continuous of no. There is when more and more loans are given by the bank and they are unable to recover it, then immediately RBI enter in there. Immediately RBI will say, hereafter don't give any loan, like that. So next comes RBI. So RBI and its departments we are going to see in the next units. Rough, I am saying you now the introduction of the RBI. So it is the Reserve Bank of India. So Reserve Bank of India, it is a pre-independence bank. Pre-independent. Before the independence, it came into existence. 1934 it started and 1935 it came into existence. At that time, this is given nationalized. After the independence only it is nationalized. So before that it was working as the Imperial Bank of India and then State Bank of India, like that. So this here it is given the structure general superintendent and the direction of the bank is entrusted to central board of directors of 20 members. The governor and 4 deputy governors, 1 government official from the Ministry of Finance, 10 nominated directors by the government to give representation to important elements. So they are the structure. What are the major people are involved in the RBI? So Act passed in the year 1934. RBI is a corporation. It comes under the corporations. So it is a separate, for RBI there is a separate act. So RBI will discharge all its duties according to that act only, because it won't come under any other government regulation. It is the separate act is there. So from 1935 it started working. So the Reserve Bank, the major objectives of the Reserve Bank: to regulate the issue of banknotes, to maintain the reserves with a view to securing monetary stability, to operate the credit and currency system of the country to its advantage. So these are the major objectives: to control the currency and to control the banks and to keep up a very good monetary system in the economy. No? So the objectives of the RBI, and now we are going to see in the next units, we are going to look into the various functions of RBI, what are the various departments of RBI, and how they are executing their functions. Okay, all these things we are going to see in the next unit. So with this, we'll end up this unit. You go through the lecture notes also and try to complete the assessment. Thank you, students.